Hello there, this is Business Incorporated on Channels Television. I am BC Adebayo. On today's show, Nigeria's Higher Education Examinations Board pays 5 billion naira to the account of the Nigerian government, and Saudi Arabia prepares contingency plans for a possible delay of Saudi Aramco's IPO into 2019. Plus, South Africa's current account deficit widens to 2.4% of GDP in the second quarter of 2017. We begin from the stock markets in Africa, where Nigeria's all-share index is keeping up the positive momentum at intraday with a 0.65% rise. The South African Bourse remains down at intraday. Egypt Stock Exchange is up 1.45% at intraday. The Kenyan Bourse reversed to negative territory on Wednesday with a 1.55% loss. And in the Middle East, shares in Abu Dhabi's Dana Gas rose early on Thursday after its Sukuk holders proposed a deal to end a dispute over payments on the debt. Holders of about $700 million of Islamic bonds issued by Dana Gas submitted a proposal to restructure the Sukuk to the company's management in an effort to end the legal battle over Dana's refusal to redeem them. We're talking about more numbers now. Blue chips were mostly slightly up in Dubai, helping take the main index 0.07% higher at intraday. Qatar's index continues to slide from Wednesday's 52-month closing low. It's down 0.22% at intraday. The Saudi index is also down 0.1% at intraday. And European stocks nudged lower today after disappointing readings on industrial activity in China raised questions about the strength of the world's second-largest economy. Let's bring in DWTV Channels TV financial correspondent Orich Batts for more on today's markets. Hello, Orich. It's good to have you. How much dent is the faltering Chinese economic data making on the European markets, and what's the outlook on this particular news bit?
Well, I think that it served to bring the markets down, both in Asia and also here in Europe. It's not a great downward trend. There's another factor as well in the United States. But, of course, when you have the industrial output, the industrial production, retail sales, fixed asset investment, all coming out and disappointing investors, then you have share prices going down. And because China is such a large customer of metals and minings, corporations, the shares of these companies are going down in an especially drastic way. Drastic is perhaps too drastic an expression, but they're going down clearly. You can notice it by more than 1%. When you look at the share prices of Anglo American, BHP Billiton, Glencore, or also Rio Tinto, they're all on their way down on this Chinese news. Here in the German market where I'm standing, the DAX is also down just slightly, and CarShare is doing a little bit better than the rest of the pack on relatively well-taken remarks by Chancellor Angela Merkel when she opened officially this year's car show here in Frankfurt.
Now, U.S. August consumer price inflation data is out, and is this a major trading theme for the markets in the U.S. and Europe?
I think that was the other major factor influencing the markets all through the day. People waiting for that core inflation number from the United States, which has seen so critical as to what the Fed will do in its next meeting, which is on next week. And that core inflation number just came out just a few seconds ago. It's 1.7%, a little bit higher than that 1.6% that it was last month, and a little bit higher, I think, than people expected. Overall inflation, 1.9%, and the Fed's goal for inflation is 2%. So the bets are on that the Fed probably won't do much to indicate that it's going to tighten monetary policy anytime soon, but we'll have to wait for next week's meeting to see if they indeed put in a statement over shrinking the balance sheet, which would thus indicate a rate rise perhaps later on this year, or keep tight about that.
Well, we sure have our eyes on that. But just before you go, Ara, tell us what corporate news is making the headlines today.
I think one interesting piece of news that's probably going all around the stock markets here in Europe is an agreement by the Deutsche Börse, the operators of this stock market where I'm standing, and one of the best earning stock markets in the world. It had to chuck its merger intentions with the London Stock Exchange earlier this year, and it also became known this year that its CEO, Carsten Kengeter, was being investigated for insider trading. And that spelled trouble for the company as well. It was served with a questionnaire that basically, from the Frankfurt prosecutors, offered it the possibility to pay 10.5 million euros in order to get an investigation into the corporation out of the way on insider trading, that is not revealing that, and also on not revealing that they were having talks with the London Stock Exchange early enough. Now, it's not official, nobody's really confirming this, but it's said, and the Deutsche Börse indicates this, that the investigation against its CEO will be dropped as well, and then probably he could stay on as CEO. The fact is, though, and the trouble for him is, though, that two regulatory authorities here in Germany are still investigating him to see if he did the right thing when he bought shares ahead of the public announcement of the intent to merge with the LSE or not.
Many thanks, Orange, for those updates. Let's do this again tomorrow. And U.S. stock futures showed little change in early Thursday's trading, signaling the market may catch its breath after another round of records. S&P 500 futures shed less than 0.1% to 22,104, while the Dow Jones Industrial Average futures lost 0.05% to 22,493.25. Nasdaq 100 futures fell 0.1% to 6,001.25. On Wednesday, the S&P and the Dow, as well as the Nasdaq, all gained between 0.1% and 0.2%, finishing at all-time closing highs for a second straight session.